Welcome back, traders. Thanks for joining me here today. The next long-term pattern on our list is the rectangle chart pattern. A rectangle pattern is a chart pattern that has an upper resistance horizontal line and a lower support horizontal line. The rectangle pattern can exist at the top of an extended bullish trend or at the low of an extended bearish trend. The top rectangular pattern technically forecasts the possibility of price breakout in two directions. Price could break out to the upside or to the downside. But in a strong bullish trend, the probability of price to break out to the upside is higher than to the downside. The bottom rectangular pattern also technically forecasts the possibility of price breakout in two directions. The price could break out to the downside or to the upside. But in a strong bearish trend, the probability of price breakout to the downside is higher than to the upside. The rectangular long-term pattern can be implemented for continuation or as a reversal trading strategy in the market. This is not a simple long-term pattern, unlike the other patterns we have discussed in this trading course. I will educate you on how to approach this long-term pattern as a professional trader in the market. Here's the top rectangular pattern on this chart. We can see how it acted as a continuation level for the previous bullish trend here. Let's check another example where it acted for the reversal of a bullish trend. Although this is not usually common, unlike when it appears for the continuation of a trend, we should be able to find a few examples in the market. Here's an example. We can see how it reversed the bullish trend here into a bearish trend. Let's see the bottom rectangular pattern, how it can act for the continuation or reversal of trends in the market. Here's the bottom rectangular pattern in this market. We can see how it acted as a continuation level for the previous bearish trend here. Let's check another example where it acted for the reversal of a bearish trend. Here's a good example. We can see how it put an end to this bearish trend, thereby reversing this bearish trend into a bullish trend. Before ever planning to implement the rectangular pattern for a trading strategy in the market, there are some key factors traders need to understand in order to properly determine the direction with the highest probability price breakout in the market. These factors are: for a continuation strategy with the rectangular chart pattern, number 1, a strong bullish candlestick is important for the price breakout of a rectangular chart pattern at the top of a bullish trend for a buy continuation signal. Number 2, a strong bearish candlestick is important for the price breakout of a rectangular chart pattern at the bottom of a bearish trend for a sell continuation signal. Take note, a retest may not occur after the price breakout of a rectangular chart pattern that's in the direction of the dominion trend. For a bullish trend reversal into a bearish trend trading strategy with the rectangular chart pattern, number 1, there must be a signal of weakness in bullish momentum and a sharp bearish breakout of the support level of the top rectangular chart pattern. Number 2, the top rectangular chart pattern bearish breakout should be accompanied by a retest through the formation of a strong bearish price action candlestick pattern, such as the pin bar, bearish engulfing bar. Number 3, The broken support of the top rectangular chart pattern should strongly hold price as a new resistance level for price. For a bearish trend reversal into a bullish trend trading strategy with the rectangular chart pattern, there must be a signal of weakness in bearish momentum and a sharp bullish breakout of the resistance level of the bottom rectangular chart pattern. These are the main factors to determine the reliability of a rectangular chart pattern. It's time we discuss how to trade the rectangular chart pattern for the continuation of trend in the market. A top rectangular chart pattern is formed when price consolidates between the lower support and the upper resistance lines. As we can see on this chart, after the bullish trend here, price made a halt, and price consolidation within this upper and lower boundary resulted in a long-term pattern called the top rectangular chart pattern. We can see how the bullish spike out of this top rectangular chart pattern resulted in the continuation of this previous bullish trend. The best entry strategy to trade this pattern is to set a pending buy order slightly above the resistance upper line of this pattern, and set our stop loss below the low of the support of this pattern here. The second entry strategy, which is not usually guaranteed in a strong bullish trend, is the retest entry strategy. This simply means waiting for a bearish retest of the upper resistance broken trend line here. The broken resistance needs to be proof as new support for price, thereby rejecting or holding price upward firmly. Conservative traders can apply this strategy. Also, the retest strategy offers low risk with a more profitable entry level. But conservative traders may be left behind in a strong and fast-moving bullish trend. It's therefore advisable to gauge the momentum of the bullish trend before deciding whether to wait for a retest or not. To take the first bullish breakout, make sure there is a higher low to the resistance structure. In a situation whereby there's no higher low formation, as we can see here, it's safer to wait for a retest for the double confirmation of the continuation of the bullish trend. In the next video, you will learn how to trade the top rectangular pattern for the reversal of a bullish trend into a bearish trend.